Good day, everyone. This is Brian again. Let's see. Today, we're going to be going over something simple, I guess, that a lot of people have some misconceptions on, and it is basically what you see on the screen: binary option brokers and where do they come from. The reason I'm doing the video, a lot of people have the misconception that these are large companies that you're dealing with a lot of times, when the fact is, a lot of times these binary option companies you are dealing with are just, I guess you could call them mom and pop businesses. It's one or two people that happen to have the capital to open up a binary options company. We're going to go into a little bit more into that on who can open up one, how much it costs, and everything. Um, but basically, who can open a binary options company, brokerage, whatever you want to call it? It's anybody. We're going to get into that a little bit more. Cost, we're going to cover different types of binary options platforms. I think a lot of people are confused that most companies really are under all the same platform. And how do they operate? We're going to talk a little bit about risk management. Risk management sounds nice for us, but for a broker, that's the way they manipulate price, manipulate the outcome of a trade to be more in their favor. So hopefully this will enlighten y'all a little bit about binary options companies and where they come from, and why it is very important. The reason I'm doing the video, the number one thing before you start trading that's gonna be that helps you is picking out a reputable binary options broker. If you go with a crap one, you're not going to get your money back, and you've basically not only lost your money, but you've wasted all that time you invested in with trading with them. So your biggest thing is to select a good, reputable broker. So, are they large companies? No. Anyone can open up a binary options company. I could go out and open up one. Why? Because they're unregulated. Once they grow large enough, yes, some of them go out and get SISEC regulations. But to be honest, that's a freaking joke too. The only time they seem to get involved is when it benefits them to fill their pocket with monies for finding a company. I don't think as of yet I've ever seen an individual go to them and say, "Hey, I lost my money," and then post up on the forum saying, "You know what, SISEC jumped in there, helped me out, and I got my money from this crap ass broker." Never see it happen. But basically, no, they are not large companies. Yes, some of them out there are large. The majority of them are little mom and pop businesses, probably limited staff, 1 to 5 people running them. I won't be saying any names or anything in here. I mean, y'all can make up your own decisions on that when you research your brokers. So let's get into how much does it cost to open up your own little binary options company. You can quite literally open up a company for 12 to 25K. That's all it takes. I mean, they're unregulated, so it's not like you're going through a thing. All you have to do is say, "I got the cash. I want to open up a company." So how difficult is it? It's not difficult at all. So let's take a look how you would go about it. This might ring a bell with you, but there's a company called Spot Option. You go to them, you say, "Here's my money." They set you up with a binary options company. Pretty simple, cut, dry. It is really that easy. There is no major technical ability needed. All you need is the money. Another company that does it for you is called Tech Financial. Same damn thing. Now, if we look, so let's look at the bottom. Who is using this? Is Spot Option. We got Bank to Binary, Top Option. These are some of the ones I at least recognize. Empire Options one I recognize. Option Rally is one I've heard about. But these are all companies that they happen to be people or large companies that have had enough money that I want to open up a binary options company, make some money, so they did. And it was really that simple. Fork over the money, Spot Option gets you going. Let's go to Tech Financials. Same exact thing. And if we look, I'll let this scroll for a second while we're here. But we've got, so far no one I know, but I mean, if you read, Tech Financials offers brokers simplified binary option software solutions suitable for mass market audience. Basically, they're saying we can set you up with a company, let it run. They take care of most of it for you. You'll notice I think 24 Options is a Tech Financial. And please don't get it wrong. I'm not saying just because they subscribe to Spot Option or Tech Financials that they are a scam company. A lot of these companies out there are good. Like 24 Options, in my opinion, is a good company. Markets World, which we're going to get into in a second, they're a custom. They don't use Spot or Tech. They developed their own proprietary software. What is it? Stock Pair is also a good company. it's the company itself that makes them whether they're a scam or not. Yeah, I see 24 options, option fair. So you in this list, you'll see some names that have known scam companies along with good ones. The company itself is what it makes it. Like here's Options XO. They've turned out recently to be a pretty big scam, and not because of the platform they're using, because of their treatment of their customers. If you look on the forums, you might see the little post someone put up about how they were treated by that company. But just because they're subscribing to this service to become a brokerage doesn't make them a scam. It really does come down to a company by company basis. I mean, if they're not going to give you a refund, it's not TechKnife Financial's fault. It's the company's fault themselves because they're screwing you over and not giving you a refund. If their terms of services are wonky or weird, I mean, it definitely comes down to the companies. So let's continue on. Different types of platforms we're covering at. There are different types. There's Spot Option, which is the first one I showed you. Tech Financial is the second, and then a custom one, something similar to like Markets World. Markets World is its own software. They developed it and run it, so it's not running off that. So one of the scary things, though, and we're going to get into that next, is a lot what we call risk management. This falls in under how they operate, how they stay in business, how they make money. Risk management for a trader, it means that you're good, using good money management. 1 to 5% of your capital is traded each trade. You're not over trading. You don't revenge trade. That's risk management for you. Risk management for a broker takes on an entirely different meaning. Risk management for a broker is how they can manipulate price, feeds, I mean anything that you could possibly think of in order to keep themselves in profit. Several ways they can do it. Let me show you a chart from today. For instance, here's gold from today, and this is Markets World, and they're the broker that I prefer to use, but they're not perfect by any means. So what happened today on gold? We had a nice big spike up. It broke all previous highs. Most likely we knew it was going to drop back down. As soon as this spike began, and this is a 5-minute candle, for this entire 5-minute candle, Markets World across the board, every pair they had, because there was a spike on numerous pairs, went waiting for data. In other words, you could not place a trade for an entire 5 minutes, and it just happened to be right after this candle ended, where it's closed down here. This is where it closed. So no longer were you up in this nice little prime area where most likely, even if price just dropped a little bit, that you were going to be in the money for a win. All of a sudden, data became available across all pairs, and we were able to trade again. So this was in a room we had 30, 40 people in the Skype room. We all saw it. One of the guys in the room contacted Market World's tech support, and their answer was, refresh your screen. It was just a glitch on his computer. And when he told him that was, not to be blunt, but he told him that was bullshit, that we had a whole room of people, they really didn't have an answer for that. So risk management on this time just was simply waiting for data. Another way they do risk management, let's take a look here, is if you look, they will just straight out suspend a pair. Let's say a pair is just giving on their end. If they are losing too much money, I guess you could say, they will just suspend the damn pair, cut out the losses they're incurring, so that you can't do it. So if you're doing very well and a whole bunch of people are doing very well in a certain pair, at times they will just suspend the whole pair. Now, back to what else they can do. Now, as spot option or this, what you have to remember is this spot options risk management or tech financials risk management filters down. I mean, it's basically, here's spot option, and let's just drop in a bunch of little companies. So here's, and depending on size, we'll just say bubbles or size of companies. So the settings from spot option get filtered out. The risk management gets sent out to each one of these companies. So sometimes in the long run, I mean, you can't blame the company itself either. It's just a spot option feature where risk management's kicking in. So, I mean, hopefully that lets you see how things are working a little bit. So let's talk about some of the other things they can do. One of the biggest things you see is, and let's talk about price and how they can fluctuate things to try and keep themselves profitable. Let's pretend this was a candle to spike up, and they aren't going to lock us out of this trade. So we get, and let's say we have 100 traders, and 50 take a buy, 50 take, I don't know, a sell, a put, and a call. Actually, let's not make it too complicated. Just let's look at what really happens here. So the key area here is, let's say people start getting into price in this area. I'm going to draw an arrow if I can find it. So people are entering from, let's say, here to, I don't know, within this area here. And they're all taking puts. They're saying price is going to drop down. The next candle we see price does drop down. Some are winners, some are losers. But let's say the majority of the people, let's say 75% of them, right here, 75% of the people that came in on the trade got in up here, so they're clear winners. Now what's going to happen is they're going to look at this whole range. Let me switch to a pencil so you can see it. Sorry, I'm sniffling. My allergies are bad. But in this area here, here's where price closed. So this area here, and I will change that color to, let's say, a blue, and we'll make it a little bit thicker. So this area here is going to be the area where some brokers may fudge the numbers a little bit. Reason being is, if they fudge the numbers a little bit, all the people that are here, slightly above it, so let's say anyone above it from here to here, if they fudge numbers a little bit, maybe they're going to put those from being winners to losers. So it happens. I'm not making this crap up. If you've been trading for a while, you'll see it happen. But it's just something to be aware of. I mean, mostly this point of this video is to show you that a lot of the companies you're dealing with, because the misconception a lot of people have are that these brokerage firms, these binary option brokers, are big companies, and they're not. A majority of them are just small little mom and pop companies, and they're out there to make a buck. And if you think they have morals, most likely they don't. There may be a few out there that they do have good morals. They want to do investment. And of course, it's a good investment because, what is it, 85, 95% of people trading fail. So right there, if you look at a business saying, well, if I open it and 95% of the people that come see me fail, that's a winning investment. So maybe there are some people that get out there and try and run a legitimate binary options company, and there are some of them out there. But some of them, and again, I'm not going to say any names on here. I think I dropped a dime on one already, but at least I can back that one up because it's on the forums how they are treated. A lot of the companies out there, you need to research. Your biggest thing before you start trading, make sure you are with a reputable company that you're not going to have issues with. Even the reputable companies are going to play some games. Risk management is algorithmed in. It's going to happen no matter who you're dealing with. As I always say, make sure you record each one of your trades. If you look through the forums, I've posted videos on how to simply record your trades. I use a cheap and easy software, well, free and easy software called Hypercam to record each one of my trades, so that I can back it up. So when something like this happens, that you know that you got screwed. The other thing you can do to protect yourself against things like this is, if you trade in a group, ask people if they took the same trade, and you get a OTM, ask them what was the close that, say for instance, me and 10 other people are trading Markets World. I got in here, right here, but and I said price would be lower. I got an ITM or an OTM. I lost the trade, but I know 5 other people who took the same exact trade. You ask them, what was your closing price? What did the broker give you? If it doesn't match up, have them shoot you over the screenshots, get in contact with your broker, open up a dispute, and if they decline it, post that crap up on the forums, close the account, and run and never go back to them. This week I've been big on harping about brokers and the fact that the brokers need us. I mean, as much as we need them to make money, they need us. And if they get a bad name, they are ruined. And it's as simple as a few people making complaints, posting up actual factual evidence. Just bad-mouthing a broker isn't going to do anything. But when you start posting up actual factual evidence of a broker playing games, one of two things is going to happen. They're going to stop. They're going to refund your money, of course. or they're going to go out of business because nobody's going to deal with a broker who's just a total scam and is screwing people over constantly. Trading is already difficult enough. Dealing with a broker who wants to play games should not be part of the equation. And if you do things right, record your trades, have that paper trail, work with other people. I mean, if you trade by yourself, post up in some forums. Say, look, I trade here at this time. See if you can get a nice little trading group going. It will help protect you. If you find people who are using the same broker as you, if no one's using the same broker as you, that might be a hint. You might have screwed up in your broker choice. Um, Last thing I could say is, and this is I harp on it every video, don't take a bonus. Reason being is if you take a bonus, even if you're doing well, once the company notices you, the same thing we're talking about, risk management will settle in on your account. So let's say you took, and we'll make it simple. You opened up an account with $100. You have a 30 times turnover, so now you have to trade $3,000. All of a sudden, you're making money. At the closer you get to that $3,000 mark, when you're going to be able to withdraw, you might see some games starting to happen with some of these shady brokers where your strike prices are off, your closing prices are off. You go pending for a long time, come back, and it's a loss. Where quite clearly on your charting software, it was a win. Another one you see that comes into hand is a lot is once you start doing well, and I've seen this one. I won't say the broker's names. Almost did, but I'm trying to keep brokers' names out of this. Is they'll say price not available, and price will be sitting at a damn standstill, and it's supposed to be there for your protection. This is mainly through, and I will say this, it's mainly through Tech Financials, which most brokers have the option to turn this off, but they're going to say, well, it's for your protection. But what happens is if price moves against your entry, like it gives you a better entry, they tell you price not available. But if price moves the opposite way and gives you a worse entry, then they let you enter. Most brokers, like 24 Options, for example, has it, but they'll turn it off for you. You just ask them, say, hey, can you turn it off? And normally within 24 hours they turn it off. There's a few other brokers out there who say that you can't turn it off, which is complete bullshit considering, again, they're all sharing the same platform technology. If one can do it, all of them can do it. So if there's a feature you see, if you go to Spot Option, you see Spot Option, and one company has it and the other one doesn't it, that means they're using it to an advantage to themselves. To basically either screw you, make money, or likelihood of you losing becomes greater because they don't want to do it. If you look on their site, I mean, just go to it, spotoption.com. Right here, risk management. I mean, they brag about how they can help with risk management to manage the profit and loss of your business. Right there, asset and payout pricing, everything. So if you think I don't know, what is it? The dude with the aluminum foil hat. If you think I'm an aluminum foil conspiracy theorist person, go to their sites and just read through what they're offering to the people who want to become a broker. It's all right there because they need to show that they can help them protect their money and make some money off you. Hope you enjoyed the video. Brought to light a little bit of things you didn't know about how the brokers operate, and that just about anyone can become a broker as long as you got the money. If you have any questions on it, let me know. I covered some of the things that the brokers do. I mean, there's a lot of other things out there. Sometimes they'll blame it on spreads, price not available, data feeds going down, but keep in mind, this is all just bullshit by the brokers to try and keep you out of a good trade, or their risk management software kicked in because it saw something that it thought was going to lose them money. You may not see it, but maybe on the other end, 1,000 people got in on a trade that they think is going to hurt them, so it kicks in, and you're affected by it. So, hopefully you enjoyed the video, learned a little, and if again, as normal, if you have any questions, hit me up. Hope y'all have a great day.